Today on Finance at 5, the markets finally turn around as the S&P TSX rises 1.72% on the day. This is driven by higher in pretty much all the sectors, driven mostly though by telecommunications and utilities. On the lower end, energy slightly increased, as well as healthcare. US stocks had a stellar day today with the S&P 500 going up 4.61%. This is off the back of a really rough week last week. And as I was saying, it was a good time to buy at that bottom. Hope some of you out there did, and able to achieve this return. But at the same time, I will caution you that there is a lot going on with coronavirus outside of China now, and it could still have impacts on the stock market going forward. Just keep that under consideration. The Dow had an even better day, going up 5.09%. It's pretty significant for the Dow as it had fallen pretty far the past week. It's a good thing to see it turn around a bit. The Nasdaq also had a strong day, going up 4.49%. In Europe, the FTSE was also up on the day, but only 1.13%. The Nikkei also went up, but just below 1%. A big winner, though, is the WTI oil. It went up 5.85%, which is a good sign considering how much it's gone down in the past. A reason for this might be is that there was numbers that came out from OPEC that they actually were having troubles with production, and production was down in the past month. And gold was up 1.36%. While stocks are up, money continues to go into US Treasuries, as a 10-year yield is now only 1.08%, getting closer and closer to that 1% level. The Fed has signaled that they are willing to cut rates, and many expect that in the coming month or sooner they may actually cut rates. Libor had a really big drop, the biggest drop since 2019. I know I said that it happened last week, but this one's even more significant. It fell 20.9 basis points down to 1.25%. Overall, yields continue to fall down. Kind of interested to see where they will go. North America might start heading towards that 0% yield or that negative yield in the future. In terms of currency, the British pound had a really rough day, falling about 1%. The Japanese yen also fell, just not as much as the pound. The euro had a really strong day, going up about 1%. The CAD also had a strong day. It finally achieved that 75 cents, going above that per US dollar. The effects of the coronavirus are starting to be shown on the economy, with certain economic figures coming out. The manufacturing in the United States has started to stagnate, with the Institute for Supply Management Index sliding down to 50.1 from 50.9 a month earlier. This still is above the 50 mark, which means they expect expansion in the economy. Below that 50 mark means that they expect contraction. The biggest area that has led to the fall is in the electronics industry. A lot of parts are made in China, and so they need those parts, and a lot of stuff shut down there is affecting this. And it should be noted that this is a significantly more drop than was expected. The US isn't the only country with manufacturing issues related to the coronavirus, as global manufacturing has shrunken, with half of the economies contracting in the last month. 15 out of 31 ended up contracting. This shows you that there is a lot that the coronavirus is doing, and we might not hit the end of the effect. For example, the JP Morgan Global Manufacturing PMI fell 3.2 points down to 47.2, which is lower than that crucial 50-point mark, which means that they expect contraction to continue. It's hard to say how much effect it will have on the economy overall. There are places like the Bank of America expects global growth to only be 2.8% now, which is the weakest since 2009. Some other places aren't expecting the most, like the IMF is still expecting a 3.3%, but they also lowered it 0.1 percentage points from their previous estimates. Overall, it's hard to see what's going to get closed down and shut down as the virus expands to not just China. Those aren't the only groups that expect the economy to not grow as fast as expected, as the Organization for Economic Cooperation and Development actually expect less growth than the Bank of America and IMF. It's cutting its full year growth down to 2.4% from previously at 2.9%. That is pretty weak growth, but what's even more concerning that with the data that they have now, that they expect that if things continue to progress and certain disruptions continue to happen, that global growth could be as low as 1.5%. JP Morgan also lowered their growth estimates for the second quarter for global growth from 1.75 down to 1.5%. This article actually puts an interesting perspective on some of their thoughts on that they won't expect prices decline because they expect aggregate demand to fall because things like tourism and activity are lowering down, so people are spending a lot less money, but at the same time being offset by the inflation of things being more expensive due to disruption that's going on in the industry. I think it's pretty interesting perspective. Overall, I don't really see why prices would necessarily fall in total. I expect they'd probably just slightly rise, or if anything, just stay the same. On a more positive note, spending on U.S. construction projects reached an all-time high in January with a 1.8% growth, the strongest in 2 years. In total, though, home construction increased 2.1%, with single-family homes increasing 2.7%, while apartment buildings at 0. Non-residential increased 0.8%, and government increased 2.6%. But most of that government increase comes from the federal government, with a 9.9% increase, while state and local only increased by 2%. Overall, it shows some promise in the construction and housing sector in the United States, and that while there are some weaknesses in manufacturing related to the coronavirus, that overall shouldn't be too worried about it as other aspects still look all right. In company news, some interesting stuff is going on with Twitter, with Elliott Management, the hedge fund, buying a significant stake, about 5% of Twitter, is actually looking to oust the CEO, Jack Dorsey. The reason for this is overall Twitter has struggled to increase their revenue and do as well as other tech companies, most notably like Google, Facebook, and all the other FANG stocks. Overall, he thinks Jack Dorsey isn't right for the job, as a lot of his time isn't spent working on Twitter, working on other things like Square, and that having a full-time CEO will allow the company to do better in the future. He isn't the only one advocating this, as others have suggested the same thing, that potentially getting a new CEO could be bring what Twitter needs and increase that advertising revenue and overall increase the share price. Currently, though, the stock is trading about 7% up just from this news overall. So the markets are reacting pretty well overall and really like this news. Big news for Gilead Science Inc. as they agree to buy 47 Inc. for about 4.9 million. So Gilead is in the pharmaceuticals industry. They make and sell drugs, and they're buying 47 Inc. for a 96% premium. Overall, it's pretty expensive. They're looking to get in on the cancer area as 47 has some interesting products in that area. Overall, though, people are reacting to this pretty well, with Gilead stock going up a decent amount, about 7% so far. This is an interesting article talking about Tesla's possible future earnings by looking at Tesla registrations in different markets. So overall, it's kind of saying that in a few of its prime markets that they aren't getting as much registrations overall. For example, in Norway last month, they only achieved 83 new car registrations compared to over 1,000 last year during that period. And in the Netherlands, registration actually fell 68%. Overall, though, right now the stock is up 9% on the day. A lot of that has to do with just how much it fell in the past week with markets going on. But trying to understand Tesla in a fundamental sense is pretty hard. So I wouldn't take these numbers as too much to see where the stock is going, because the stock has had an incredible rally. It's currently at 724 per share, but like I don't know, a couple months ago it was a few hundred less. And it's had a significant jump overall.